Deven, good numbers from Glenmark this time. Would you, if you had positions in this stock or if you own it, would you accumulate more?
Yes, Sonia. I think this is a company where one can probably accumulate more. Two or three fundamental factors. One, I think the way in which the company has systematically brought down the debt component in the balance sheet and is bringing down further. I think that is giving confidence, and that is where I think it is reflecting into this confidence that the profits would be on a higher side going forward. Second most important thing, the generic portfolio continues to produce better performance, and R&D driven revenues, I think, which is not yet been talked about, I think, in this particular con call. I believe that that could be, one more trigger that one could look at it. So certainly I think this particular company, Glenmark, remains in our favorable list of portfolio of pharma, and we add into the stock, as and when the market permits at a lower levels. We continue to hold this stock.
What was the trigger you said that you were looking for?
From the R&D side?
Okay, yeah, from the R&D side.
Yeah, basically I think the milestone payment clarity has to emerge in this particular year, financial year, and that's where one could probably see the performance of the company could probably look much better than what they are talking about.
Even would you want to top up what we call the Modi stocks, any of them, probably also because they're good in fundamentals?
Well, I don't know, Lata, about Modi stocks, but the stocks which we hold in our portfolio and we like to buy into the portfolio in corrective market, they would include, a list of Adani Port. For sure, this company is looking fundamentally very strong. Given the kind of tonnage capacity and tonnage handling capacity that they have added, in different ports that they are operating, I would believe that 15 to 20% kind of a generic growth would come in this particular company's business in 14-15 financial year. And at the same time, given the fact that going forward the activities are likely to increase on the trade front, if the GDP starts improving, then in such situation it will directly benefit this company since they are handling the port business. So to my mind, this company looks fundamentally very strong and very interesting. One could add this stock into the portfolio in every corrective fall or the dip in the market.
This week will be another week where IT stocks go home as the biggest losers. So HCL Tech down 7%, Infosys as well. What would you do with some of these big names? Is there anything that you would buy into now?
Within the frontline IT stocks, probably one will have to shortlist couple of stocks to keep in the portfolio, and rest of them one could probably swap into some of the other investment ideas. TCS and HCL Tech, both these companies, they remain reasonably positive. HCL Tech is promising to grow at somewhere around 15 to 16%, and TCS is promising to grow somewhere around 17 to 18% in the financial year 14-15. HCL Tech is still available, at a valuation of around 13 times price earning ratio on a forward basis for next 12 months. So from that perspective also, this company looks reasonably priced. Rest of the IT companies probably are struggling at this point of time, though Wipro is showing some signs of improvement, but I'm not totally sure whether I would buy into Wipro vis-a-vis HCL Tech and the TCS. So that's where the choice would remain with these two companies. At the same time, larger investors are also taking some money out from the IT portfolios and probably putting money into the risk assets, where one is seeing the higher amount of growth potential, particularly in the infrastructure space, and some of the contracts are being taken in even the commodity space. So that's where you are seeing the shift in the portfolio taking place from IT to others.
Yeah, very distinct, at least on the NASDAQ, you can see it every day. Deven, we've seen a bit of dip coming in the likes of BHEL. Do you like anything in the capital goods space?
Well, one may want to buy into the capital goods space. I'm not ruling out that particular space completely. However, the clarity would take, more time for these companies, particularly, the order inflows. Even assuming that, the government comes into power, they would at least, take at least 2 to 3 months to kickstart the engine in the economy. And that's where, one could probably argue that if market gives corrective downside during this particular period, then it would be a better time to buy into this company. There is no doubt about the fundamental strength. One could possibly definitely buy into this company given the strong fundamental strength that this company is possessing. But at the same time, for the timing purpose, it would be a better time to buy somewhere in the corrective downside if the market gives one during the course of election or post-election results.
You must have heard what my colleague Rima pointed out in terms of the JP Morgan report, Deven. Do you buy that argument that Infosys could in the next 10 years perhaps go down to a single-digit growth as well in order to justify the valuation gap that we're seeing between the two companies? Or is it too far-fetched?
I think 10 years could be, I think, something which is, of course, interesting observation, but the 10 years, I think, something which I would not like to buy a bet on. See, the company has inherent strength, and I don't think that I think this company has given up. At the same time, I think this company is trying to stabilize, I think, again back onto its business model, and that's where I think one could probably see some kind of a change happening. At the same time, let us not forget that I think this is a time wherein I think you find some amount of disruptive ways of doing businesses, and that is where I think one could probably say that companies like Infosys, with so much of cash in the balance sheet, if they find out some important ideas, probably I think related to the internet space of working, e-commerce space of working, probably I think in cloud computing, I'm sure I think that could possibly happen to be I think a next trigger for this kind of a businesses. So I would not I think venture and say that I think for 10 years I have got a clarity. I would rather I think take this particular call every day when I read these businesses, and probably I think take a call. I really believe that Infosys has strength in the balance sheet, and they could possibly bring the change at some point of time, which would be quite distinct as I would expect.
All right,
Deven, if you're still with us, I wanted to ask you about the Just Dial share. Do you think it has bottomed out? We saw a considerable amount of selling. CLSA calls a buy.
Well, I like this company. I think the business model is pretty interesting, and there is a lot of upside headroom available for this company. The way in which I think they have taken the subscribers at this point of time, I think from on the merchandise side, I think they are likely to increase. At the same time, I think they are gradually adding different verticals within the business space. So from that perspective, I think this particular company has a lot of upside potential. However, I think it has been quoting at a premium, and in line with other Nasdaq stocks, I think almost all the stocks have corrected. We have seen the fall into this stock. Whether one could buy now or one could buy a little later, I think that's an argument one would place. I think whether one should buy expensive and stay invested. The company remains still expensive at this point of time, though they hold a lot of potential. I believe that I think even though it is trading at a premium, there is no harm in taking investing some money into this company, and probably use the opportunity if at all market gives at lower levels, and then I think add more. But this is a business which I would like to own, and probably I think stay invested with.
What did you make of the auto ancillary stocks? Are any of them on your buy list?
Not really, Lata. I think most of the companies which we are holding, like including Bosch and Webco, they are already I think trading at a good premium in the market, and we continue to like these businesses. Haven't I think looked into I think many other auto ancillary business, from the sheer fact that I think most of the frontline auto companies are available at a good valuation. So it is time to put money into those companies vis-a-vis the ancillaries, and that's where I think we would consider buying, or we have bought I think Tata Motors, and would consider buying further into Tata Motors, Bajaj Auto for that matter, and even I think Ashok Leyland, because we believe that there is a turnaround happening in this particular space, and I think one could probably make more money, I think, given that possibility of earning out of these businesses in next I think 12 to 18 months time.
All right, we'll leave it at that. Thanks a lot, Deven, for joining us, and of course we'll touch base with you for perhaps the exit polls and thereafter as well.